I'd now like to welcome our presenter for today, Rachel White from Azure Group. How are you today, Rachel?
Yeah, I'm very well. Thank you, Laura.
Great. So can you please give us a quick overview? What will you be talking about today?
Sure. Anyone who's involved in managing a business, inside a business, owns a business of any size, regardless of if you're a sole trader all the way through to a large publicly listed company, managing your cash flow is one of the most important things any business that's going to succeed needs to do well. As the reason it's particularly relevant this time of year is as we come into the Christmas season. For many businesses, sales tend to drop right off in December and January. That's not always the case. For some businesses, their sales actually go up at that time. They have this issue a different time of year. But it is particularly relevant for this time of year, and like many things in life, it's important to plan. And so today's webinar will be a few tips and tricks that may help all the business owners out there and all the people involved in managing cash flow for business have a more enjoyable Christmas holiday.
Great, let's get into it. Tell us a little bit about your background.
Yeah, sure, Laura. I've had a 20-year corporate finance career. I have worked in large organisations. I lived in America, in Silicon Valley for a while. I've worked for American high-tech companies. I've worked for large property companies here in Australia. A few years ago, I changed directions a bit and actually went into business for myself. So I also am very close to managing this cash flow issue in running my own business. I am a freelancing CFO. I jump into small businesses which are growing fairly rapidly, and I help them manage these issues that we're going to talk about today for those businesses. So I do that for 3 or 4 companies. Redback Conferencing is actually one of them. I am Redback CFO, and I do that for a variety of different small business customers.
Fantastic. So why is this topic of cash flow so important this time of year?
So Laura, as I mentioned before, as we come into the Christmas season, this is something that is an issue, particularly around this time of year for many people. It's a time of year that people want to recharge and to get some rest and relaxation. It's actually quite good in some respects because when business does drop off from the viewpoint that people do get some downtime. However, that can be very much counterbalanced by the stress that can cause. It's a very simple reason behind the problem. The revenue drops right off, as I mentioned before. Sales can drop right off, but people still have to pay their employees. They still have to pay the rent. The bills still keep rolling in, and how you balance those two can get quite tricky. Anyone who's been in business for a long time may be fairly familiar with this, and they'll have their own tips on how to manage this. I think the most important thing to remember is if you're aware of it now, now's a great time to do something about it. Once you get to January, February, if you do have a problem, it really gets quite tricky. The other reason we need to do this is there's many business owners out there who are looking to sell their business in the next 5 years, and one of the things we'll look at later in this webinar is the impact your current cash flows can have on how much other people perceive your business to be worth. And so that's also, while it's great to look at these things for now to help you get through the Christmas period and have a better Christmas holiday, putting those tips and tricks in place now can actually help you in the long term for all the business owners out there to ensure that your business has maximum value as and when you're ever looking to sell it. For those who are actually involved in the finance function within an organisation, this is obviously something that's of particular relevance to the CEO of your company. Anything you can do to help them there is something that they will very much value. So let's have a quick chat about what we expect to learn today in today's webinar. The first thing we're going to talk about is the what. I've learned over in all of my experience that people have different approaches to how they manage their money, either personally or in business. And in many respects, people have a very similar approach to both. to actually implement some of these tips and tricks, the first step is to actually understand what your own personal approach is to managing your money. It's much easier to go with your own approach and implement strategies that gel well with that approach than necessarily try and pick a different approach. The other thing we'll talk about is some practical tips for making some changes now. Those changes will potentially help you over the Christmas period. They will also potentially help make the business you either own or are working in potentially more valuable. So to begin, to start with, let's talk about the approaches people have to managing their money. I've tended to find over the years that how people manage their money is actually very, very similar to how people manage their own personal health. People have different approaches to how they manage their own health, and that does often translate into then how people manage their money. And so I tend to find that's a good place to start to try and answer this question about how you manage your money. There are three main approaches I've noticed over the years. The first is best described as the preventative approach. From a health viewpoint, this is someone who, they watch what they eat well, they exercise, they go for a checkup every year, they have vitamins, they steer clear of the bad stuff, that sort of thing. Now, in saying that, you can be as good as gold in all of that, and you'll still have something come along and impact you. But obviously the impact of that is potentially minimised or headed off through the fact that you've dedicated good time and effort into that approach. So it's very similar when it comes to managing your money. If you're in this category, you're someone who you probably already know what your cash flow is going to look like over Christmas and in the long term. You keep good records, you have all the insurance policies in place, you're very much prepared for the future, which is great. Obviously you invest significant time and effort in that. The second category is the deal with it when it happens. This is someone who, I don't know, they go out for a night and it rains and they get a cold. At that point you have no choice but to deal with it. And people have various strategies for trying to deal with that situation. If you're someone who's in reasonably good health and that happens, you can probably absorb that and it's not going to have a massive impact on your life. Where this one can really, really be a problem is if your business is in an area that's sort of just going along normal day-to-day, month-to-month, steady as she goes, this approach is actually fine there because there's not great big surprises out there. As we all know, the surprises do exist in the external environment, and the best way to deal with those is to plan for them. The sector that springs to mind here is the bricks and mortar retailers. So what I mean by that is all the people who own all of those shops, which are in your local suburb or on Pitt Street Mall in Sydney, for example, or in your local town. 10 years ago, they had a business model that was relatively steady as she goes. They knew their margins, they knew their customers, they knew their seasonality. Obviously, the advent of online retail has substantially changed that. And whilst managing your cash flow is not the only way to address that, I would imagine many of those people are actually in a serious cash flow problem now, which a little bit of pre-planning can help them deal with and transition through, as opposed to absorbing it when it just happens, if you see what I mean. The third approach, the adrenaline junkie, this is the person who likes going skiing down the Black Diamond runs at Thredbo. Sometimes when they get to the bottom of the hill or even halfway down, they break their leg, they need to be patched up. The true indicator of this personality type is once their leg's healed, they get back on the ski slopes and they do it again. And there's absolutely nothing wrong with that, by the way. There's a lot of people in life who just really enjoy the thrill. The business owners that spring to mind here and the ones that we know about and we hear about are the very, very successful heads of the IT companies, such as Steve Jobs from Apple, and I'm going to hazard a guess, the head of Google was probably, I don't know him personally, but was probably like this as well. I've worked in the high-tech sector for many years, and there's a definite bias in that direction. They're the risk-taking entrepreneurs. They build something amazing. For every single one you know about and hear about as being the amazing entrepreneur, there's another several hundred who haven't made it. However, they've still got that very much risk-taking appetite. These, similar to their personal health, they're not people who will necessarily pay an awful lot of attention to the signals within themselves. They may not. It's not something they invest a lot of time, effort and energy in. They have great confidence in themselves and they know that it'll all work out, and that's fabulous. They're not good attention to detail people, and so often I tend to find with these people that there's no, as I said before, there's nothing wrong with the approach. There's many people in this world who've been very successful in business with this approach. Usually they have someone who's a partner who is good at this stuff, who they work with and who deals with all of the detail that goes into all of this.
Is there a wrong or a right approach?
No, Laura, that's a really good question, and no, there isn't a wrong or a right approach. I think it's understanding who you are as a person and how you approach these things. Using that strategy is actually where you'll be the most effective. A lot of it's also you may be a preventative person and you may have an adrenaline junkie in your business. You may not even necessarily be aware of it, and that may be creating a certain amount of tension when it comes to managing your cash flows. Understanding where that person's coming from may help resolve that situation. So that person will bring other skills to the table. It's not necessarily, in this area. As long as they value what you do, then you'll tend to find some of it's a good way sometimes to look at resolving some of those tensions. Being aware of it's obviously always the most important part.
Great.
So obviously the next logical question that comes from all that is, which approach are you? I tend to find the best way to figure out the answer to that is to have a look at this list of tasks. These are all tasks which are very much prevalent in many businesses day to day. They have to be done every day or every week or every month. And what I'm going to ask you all is just to take a quick look at that list of tasks. And as you can see, the people who are in the preventative approach category obviously have a much heavier weighting than people at the other end of the scale. So just have a read through of those tasks, and just have a think about, in any given week, how much time do you spend on all or any of these sorts of activities?
Okay, so we're going to launch a quick poll. The question is, how many hours a week do you spend on these? Please select the answer that fits you best. There you go, Rachel. Here are the results.
That's great. Thanks, Laura. So yes, we've got a good spread across the group in terms of the amount of time people spend on these sorts of activities. Pleased to say that everyone spends some time on it. But yeah, so there's definitely a good spread there, and I'm sure it's a reflection of the size of the organisations that you work for. The more hours you spend on this stuff, the more likely you are to be in the preventative area versus at the other end of the scale. So hopefully that'll be helpful for you in as we go through each of the approaches in figuring out, and some of the tactics and tricks you can use in each area as we go through that piece. So as I mentioned before, Laura, each approach has its pros and cons. So obviously we've touched on the preventative approach, and in many ways, if you look at managing people's cash flow, you'd think this was probably the ideal approach. It can be, especially at certain evolutions of a business, especially once it's hit that very stable stage, to make sure that you don't have external shocks which are going to cause you problems. In saying that, every hour you spend on this stuff is not necessarily time you're spending on growing the business. Now, for people out there who are working in the finance function for a business, that's probably okay. Obviously, you've been hired to focus on this level of detail, to allow the person running the business to go focus on growing it. And the role you play there is huge in allowing that person to do that, and I'll show you why later on. For those of you who are business owners, this is always the trade-off, how much time you spend on this stuff. When I meet a small business owner, the first question I ask them is, how much is your revenue growing at the moment, and are you potentially overcompensating from that viewpoint? One of the things we'll look at later on is the impact revenue growth actually has on the value of your business. The other thing I'll also say is that by far the best way to improve your cash flow is to grow your revenue long term. There's some various tips and tricks that we can do in the short term, but it is very important to stay on top of this stuff, so I applaud people who are in this category. But you've just got to remember that there is another side to it as well. To deal with it when it happens. As I mentioned before, this area applies very well to a business which is fairly stable and steady as she goes. Fairly stable revenue, or the patterns are fairly easy to predict, and so it's the time that you would actually invest in tracking things may not necessarily be well spent. But the problem is, when something changes in the external environment, it can hit you very hard. So if I use the Christmas analogy, I mean, the preventative people will already probably know where they're at the end of January, February time. The people who are in the deal with it happens approach, that may hit them in February. January, February is when they find out. And so that's at that stage, it's much harder to do something about it in terms of all the various tips that you can use. Let's talk quickly about some of the strategies you can use. So let's say you have done all of your planning, and this applies to both the preventative and also the deal with it when it happens people. Let's say you have done your planning and you do actually do up your cash flow forecast and all those sorts of things. Let me just talk through some things that you can do, and especially if you've got just a short-term problem over the Christmas period. Cash is gold at that point. So if you're looking like you're going to have a little bit of a problem around the January-February time, if you need to have a sale over the Christmas period in order to turn over more product or sell more services and bring more revenue in, that is a very valid approach. There is also to do deals with customers, especially in the services. Obviously, in the services industry, there's only so many hours you have in the day to do delivery. So it could be that you can do deals with your customers. They get a significant discount if they pay early. So if they prepay for you, put a deposit down on a big project next year, they get a better deal. Some of those sorts of things. That works really well where you have a stable base of clients who know you well and would actually value saving some money next year themselves. So figuring out the right strategy is all about actually knowing who your customers are and what they will respond well to. On the other side of things, if you've got in your personal area, you've got some good assets around property and those sorts of things, bank overdrafts start becoming a possibility. And again, now is the time to do it, as opposed to next January. They're some of the main things you can do. The other side, not to forget, is on your suppliers. And this is actually an example we'll walk through, that if you have suppliers that you pay, if you can do deals with them to extend payment terms, they have a vested interest in you staying in doing well in your business. If they can help you out over that period, they well and truly have a vested interest to do so. Obviously, the other one that everyone talks about a lot is just being very, very on top of your customer collections. For many clients, their accounts payable departments disappear probably about the 20th of December. And so having all your collections procedures in place much earlier than that can well and truly help you over that period. If you're a preventative person, you've probably already got all of those strategies in place. You may be more focused on the supply strategies and the collection strategies. I would encourage you to look at the revenue strategies. If you're in this category, I would encourage you to do a cash flow forecast to see if where you are going to be around January, February, and then take a look at what makes sense for you. Now, if we'll talk a little bit about who you can go to later in the webinar around who can help you with these sorts of things. Let me just touch briefly on here. Generally speaking, when I do these webinars, I tend to focus on a fair bit of detail around cash flow forecasting in these webinars, so it's not the sort of thing that I usually get the adrenaline junkies actually signing up for, which is fine. I usually, when I meet them, encourage them to make sure they partner with someone who is good at this stuff and very much on top of this stuff. And this is actually what I do for my clients. I have worked with these people before. What I'd say to the people on the webinar is, if you're a business owner, you may have one of these people inside your organisation, and they just won't be good at this stuff around focusing on the detail and helping improve cash flows. If you're in the finance department, I think anyone who's worked in a finance department will be very aware of who these people are inside the organisation. A lot of it's just understanding where they're coming from and working with them to find ways that they can get on board with what you're trying to do in terms of improving, the cash position of the company and the cash flow techniques. For the adrenaline junkies who don't have a partner, once disaster hits, there is no one around to patch it up, and that's before I mentioned for every successful IT entrepreneur, there's probably several hundred who aren't, and this is often their downfall. Has been known to happen before. So as I mentioned before, obviously the next question that brings to mind is, well, where do I go to get some help with this sort of stuff? And it's actually not necessarily an easy question to answer within the industry. A lot of accountants are good at this stuff. They're excellent at helping you manage your tax affairs. That's what they're known for, and that's what they do very well. Many of them are starting to move into supporting business owners in this sphere, especially with the advent of a lot of cloud-based accounting software that's making it much easier for accountants to interact with their clients in a much more real-time kind of manner. So it could be that your accountant is actually someone, as a business owner, who can help you with this sort of thing. Your financial planner the financial planners do get asked this question. Often it's with business owners who have a personal financial planner. From a financial planner's viewpoint, they're very interested in how much your business makes as an income stream and then how much it's worth, which is something we'll get to a bit later. They're not necessarily people who will be able to get inside your business. In saying that, they may have contacts into products within the financial services sector who can help you with certain things, especially around working capital facilities around your receivables. I've noticed a big change in the last 6 months in the market. There's now a lot more facilities, and I know I'm personally getting approached a lot more for products, for people who want to sell those products to me and to my clients around working capital facilities which are based around your receivables. Your bank manager should be someone who should be able to help you with cash flow. They used to be, I think, in days of old. Again, many of them are now those product salespeople that I just spoke about. I've also not met too many business owners who are actually happy to go talk to their bank. Insurance broker, they may have a few tips. They can actually do some stuff to spread out your premiums and those sorts of things, which can be helpful. Generally, they're not necessarily people who have this. Most business owners I know actually find someone, a friend or a colleague who has loads of experience in this area, or their own partner may be someone who can help them. Obviously, for people who are on the phone who are finance people within their organisations, this is what you do every day in terms of managing the financials of the organisation you work for. And often, a lot of what you can do for your owner is actually the person who owns your business is to be very proactive in this area. It's enormously valuable for them. They may not necessarily realise it, but this is an area where you can actually help yourself inside the organisation by being very proactive in this area. We're now going to do a very quick case study to illustrate a couple of the points that we've talked about so far. So we're going to have a look at a fairly simple business model. This is a business that just sells one product. Obviously, most businesses are much more complex than this, but this should give you the general idea of the concepts that we're talking about. So this is a business that sells, it's an outdoor dining suite to household, and they sell it for $1,100 each, including GST. That's retail price. They import it from overseas at $300 a unit. They're an online business, so they freight it directly from the docks at the warehouse to at the port to the customer's property. So obviously the investment they've made is making all of those supply chain logistics really, really efficient to cut out a lot of the costs between the cost of the unit and how much they sell it for. Customers pay it online at the time of order, and you pay suppliers also at the time of order. It could be that actually happens at the time of delivery. The material point here is the fact that the customers pay you and you pay the suppliers at the same time in this example, wherever that is in the flow. You as a business owner, you draw a salary out of the business, and plus you run your car and a few other incidentals through the business, which is pretty normal. You have a couple of staff members who help with. You've realised that a lot of the logistics, smoothing out the logistics and getting good margins, is about really good customer care. So in terms of those staff, they do take a very active role in ensuring all those supply chains and logistics work. You have a small serviced office, and then you have obviously your principal costs that you've invested in the past is the cost of the website and the online delivery. Obviously, this is an Excel template, and this is an Excel template that you'll get at the end of this webinar. I appreciate it's not necessarily that easy to read, so I'm just going to pull up the pointer. As you can see here, these are the units sold per month. The P&L itself is fairly simple in terms of sales price, which is $1,000, which is excluding GST. Gives you your total revenue. Your product purchase is $300 a unit, your freight, and that gives you your margins. This is a business that turns over $485,000 a year with margins of $329, so reasonably healthy. These are all the various costs. As you can see, there is the salary, which is yourself plus the 2 staff members, and there's the motor vehicle and all the other incidentals. In terms of the other costs, those bank fees are higher because of the fact that you take credit cards online. Now, there's some other costs which are embedded in here, which relate to the fact that you're an online business. As you can see, once you've taken your own salary out, and it's really important that you bake that cost in to figure out your true margins. This is a business that makes $30,000 a year on turnover of $485. So if you were looking at this as a product line within a business, you'd look at it in the same way. In terms of your total revenue and attributing all your costs against that product. Now, in terms of the cash flow forecast, based on this profit and loss, this is the cash flow forecast, or the cash flows that this business would generate. And this is actually an interesting one. I've tended to find over the years that people actually put the profit and loss statement and cash flow together. The first thing I do when I talk to someone about their business is actually split them apart. Because people tend to know how much their product sells for, and they know how much it costs to deliver. And they know what their other costs are. They know how many people they employ. But if you try and put them all together in one page, it gets very mixed up and very confused. So I tend to find the first thing I do is just split them apart, and then that makes it all a lot easier. This cash flow forecast page and the spreadsheet template that will be coming to you is actually linked. All the formulas are there to link it into the profit and loss page. So generally, if you update the profit and loss page, this sheet will update. I'll highlight a couple of things which you've got to fix. As I mentioned before, for many business owners, this is predicated on having good skills at Excel. You don't need to be a genius at Excel to use this template, but you need to be reasonably familiar with it. I know a lot of people aren't, and that's okay. If you're a business owner, I would strongly encourage you to find someone out there who is good at Excel, who can help you put this template together in a way that is very relevant for your business. So that's your opening balance there. At the beginning of the year, we had $15,000. These receipts from customers include the GST, so that's the full retail price of $1,100. Product supplier payments are, as I mentioned before, the $300 a unit, plus the freight. The other suppliers, generally speaking, people pay their other costs in the same month they incur them, so it's not like you have 30-day terms normally there. And then obviously this is the big bill here, which is payments to staff. Now that number there is the net of the tax which is withheld. This is probably the principal reason we split the two apart between cash flow and the income statement. Once we get down to this line here, the payments to staff, that's reasonably familiar territory for most people. It's once we get below that is where it starts. These are the things that tend to catch people out. And the reason why is because, as you can see, all of these other payments are very, very lumpy, whereas down to payments to staff, they're very, very, reasonably predictable. They're fairly smooth. They're either very smooth month to month, or they're going to be lumpy because of the number of products you sell. It's all of these other lines down here that tend to catch people out. So the first thing I'll say here, which is with the payments to the ATO, for the finance people on the phone, they'll be very familiar with this. For the business owners, this is something I would encourage you to make sure your accountant always has up to date. It's how much you owe at any point to the ATO, and also how much you owe in superannuation. And the reason is here, these payments going out in July, August and September, or July and August in particular, relate to amounts that you owed at 30 June 2013. So when your accountants do your books, or your bookkeeper does your books, it's really, really important that they keep the liability section of your balance sheet up to date. Now, for the business owners out there, you may not know what that means. This is something your accountants should know backwards. And so I would encourage you to make sure they're keeping those balances up to date of how much you owe in GST, how much you owe in PAYG, which is the tax withholding for your staff, and how much you owe in superannuation. Get that right, and that's the one. You're on the way to good cash flow management. This is the thing that catches many people out. So these payments here for August and July relate to amounts which were actually owed at 30 June. Whereas this September amount here actually is the PAYG for August. These other amounts here are all very formula driven. So they're all based on the P&L. So all the things, the inputs you put onto the P&L then drive all of this. The other updates you'd have to make is the payments to product suppliers don't have GST in them because it's imported. Again, your accountant should be able to help you with that stuff in terms of what should include GST and what should not. That then gives you your net cash in and out every month, and then your closing bank balance. Now you'll notice here I've got something in red. So at the end of March, this model shows that you'll have a very, very low cash balance. The usual guide I use here is how many weeks overheads do you have in the bank at any point. And a lot of that's the payroll number. So you've got $12,500 a month going out, and you've got very low balances here in order to pay that. That's pretty tight. And that's something to look for. The other thing you'll notice is, obviously, I mentioned before it was the Christmas period that causes this issue because we've got lower cash receipts coming in. It's not really until the end of March that the problem really manifests itself, and a lot of businesses do actually have that. They get through Christmas, they think they're fine, and then all of a sudden it hits them at the end of March just because of the time delays on everything coming through. So let's say you're one of the preventative people. You've done this cash flow forecast. You can see this coming. What do you do about it? So what I'm going to show you is an example where we've made one very simple change, and one change only. Everything else is exactly the same. And that's in here. For this business, you've now been working with this offshore product supplier enough. You've been paying them up front, or paying them when you're, at the time of order. You've now got enough of a track record with them to transfer them to 30 days. That sounds like something fairly small and fairly simple, but this is the impact it has to your cash flow at the end of March here. Now that's a level, that's much safer. That's getting pretty close to 1 month's payroll. Remember, a big chunk of this number here includes the payroll you're paying yourself as a business owner, and many business owners use that to bridge very short-term issues. So that simple change back here in September then basically helps you get through that period. in a way where you don't have to get overdraft facilities, you don't have to go see your bank, you don't have to put mortgages on your property, etc. You don't have to offer discounts, etc., etc. So it's a very effective way of dealing with a short-term problem. And I'll show you in a minute how it can actually help you in the long term as well. You're dealing with suppliers who have a vested interest in your business doing well. So they are people who want to work with you. And so I would encourage you to take a look at that option if your business model allows it. So this is a case study, and this spreadsheet template will be coming through to you all, which helps you with the dealing with that festive period problem. And just going back to the personality approaches, if you're a preventative person, chances are you've already done this, or you already know how to do this, and you can fill in this spreadsheet template yourself. If you're a deal with it when it happens, you may not be so comfortable in Excel. There is nothing wrong with that, but I would just encourage you to find someone who is, and who can help you put this together. It'll help you know what's coming and deal with it. Let me now talk about the long-term impact some of these changes can have. So there's many businesses in Australia in the next 5 years that are going to be looking to sell. Now, one of the questions finance people and accountants get asked a lot is, how much is my business worth? How much your business is worth is to do with a myriad of different factors. What I'm going to show you here is where the long-term effects of these changes we've made can actually impact that business valuation. Now, at the end of the day, if you're a business owner, your business is worth how much someone else is prepared to pay for it, and that buyer will be talking to their accountants and their advisors about how much that business is worth. If you're a finance person inside an organisation, this is something near and dear to the owners of the businesses that you work for. And so let's talk about the flow and effects that some of these changes we just went through can have to your business valuation. Now, let's talk about the potential buyer. The accountant who is advising that buyer, one of the things they will do is something called a discounted cash flow, or the net present value of your business based on the long-term cash flows of that business. You can see here a calculator on screen. Can I just absolutely emphasise that the number at the top is not the value of the business. It is the value, the net present value of the future cash flows of this business that feeds into the business valuation process. However, the bigger this number is, the better. I find it a helpful tool to help people figure that out. For this business, it's growing 10% a year. For the buyer, the interest rate they use to figure out how much to discount the cash flows by is 19%. Now that's comparable, by the way, to how much it costs to get a bank overdraft. So this is the risk factor that the banks will put on future cash flows. And so the income they earn to cover that risk. It's the same concept. So if you think about this is about the same level as credit cards cost, bank overdrafts, that sort of stuff. It is more expensive compared to the interest you pay on your mortgage. That's generally how I correlate this. Within a business, obviously, it's much higher risk than a property that's rented out to tenants. This is a business that makes $400,000 a year. All of these other adjustments down here, down to the income tax line, your accountant should absolutely be able to help you with if you're a business in this situation. And there's pluses and minuses in here. One of the things that will go out is the URL where this calculator sits. It's a free tool online. Let's talk about these three items down here. So in the profit of $400,000 a year, you're growing 10%. Your receivables went up. They go up by $100,000 each year. And your payables go up $20,000. And the reason is because the timing of your cash flows is about the same, but you're a services business in this case, and so your receivable, the amount of money you're getting in from customers is much, much higher than money you're paying to suppliers compared to employees. So what we're going to show you now is what happens to this NPV if we make a couple of changes. So firstly here, everything is exactly the same, but you can see that the NPV has gone up to $4.6 million. The big change here is the accounts payable has gone up. It's gone up to 60,000, and the reason is because this business has pushed out its payment terms to suppliers. That in itself increases the free cash flow inside the business. So when this calculation is done, this number goes up, and as I mentioned before, this number going up is good in terms of figuring out what your business is worth. Now let's look at another change, and this gets back to something I mentioned right at the beginning of this webinar. We're now at 5.9 million. That's a big jump. Now why is that? So we've still got the big change here in accounts payable. Annual revenue growth has gone up. Instead of being 10% a year, is now 12%. That's not a huge change. It's one of those things where you can press what is a relatively small lever, make small incremental changes, and as you can see, it has a very, very significant impact on this NPV. So usually the strategies I use in the businesses I work with is we start down here and we address the issues down here to free up as much cash flow as possible, to then go focus on this number here, to basically grow this number here as much as possible. So as I mentioned, after this webinar, we'll be sending out the spreadsheet template that we went through before, and I'll also send around the URL that has this calculator in it. It's a free calculator online. It's not copyrighted to anyone as such. So I've obviously presented a fair bit of material so far, Laura. I'm just going to ask, I guess, are there any questions, do you think, from anyone, or from yourself or from anyone else?
Yeah, if you do have a question for Rachel, please type it in the chat box in the bottom left-hand corner of your screen. Okay, we don't seem to have any questions at this time. Please continue, Rachel.
Okay. So now we've talked about all the various personality approaches, or the methods by which you may approach your cash flow, and a couple of tips about what you can do over the next few months. Obviously, what do you do now? What are the next steps? I know this sounds self-evident, but this is really, really important. This is basically about doing a forecast. Many businesses don't have a forecast. I saw a statistic a couple of years ago, I think it was from ANZ, that was 85% of small businesses in Australia run their business based on their cash in the bank now, as opposed to necessarily knowing what their future cash balances are going to be. So I said, if you're not comfortable with Excel, find someone in your world who is, and start working through some of these sorts of templates to help you understand what's coming. And also, most importantly of all, understanding if your sales drop right off for some reason, how long do you have to deal with it and fix it? That's really important to know. And then in terms of the other things that you can do and you can do now is obviously looking at money coming in from your customers, money going out to suppliers. We talk about this a lot. This is just a never-ending, constant focus and discipline around this. With all of my clients, I mean, we focus religiously on this in terms of customers paying us. The second we feel we've gotten to a plateau and we sort of back off a bit, it slips out again, and so we do another push to ensure that our customers are paying it. So the second we feel we've gotten there, we haven't, because we've got to get there again. And so basically, it's making sure there's someone inside your organisation for whom this is their day job to focus, to follow up with clients. The other piece of this is making sure your invoicing is of really good quality. This is a really important touch point with your clients, the invoices you send to them. That the money coming in is being allocated to the correct customer. There's nothing more frustrating than, as you know personally, getting a statement from a telco where you've already, like a telephone provider, where you've paid them and they haven't allocated it correctly, and then they start sending you letters of demand. That's not a good customer experience. So it's focus. It's making sure that the money coming in is being allocated against the correct invoices. A lot of the cloud-based accounting software that's now appearing, Xero is very much a leader in this. MYOB is producing some good cloud-based software that's basically automating the bank feeds coming in and allowing this to happen a lot more efficiently. So I'd encourage you to look at those things. And then doing a better deal with your suppliers. Your suppliers do have a vested interest in you being successful. And so building long-term relationships with them that allow you to do a better deal. Most people feel doing a better deal is getting a better price, and that is very, very important to protect you against long-term price reduction. All prices for products and services do often tend to come down over time. So that's really important. But don't underestimate the importance of those payment terms. If you can push them out, even by 30 days, it's amazing how much cash you can free up to invest in growing your top line. And they are, at the end of the day, the main areas, the main three things that if you focus on should improve your cash flow over time, but especially over this upcoming Christmas period to ensure everyone has a really good Christmas holiday. So, Laura, that was pretty much everything I wanted to talk about today. I just wanted to say for everyone out there on the phone, there's a few things that'll be coming your way. So I work through an accounting firm called Azure Group that has CFO practice. We are putting up an ebook with the New South Wales Business Chamber. So there will be a link to that coming through for everyone once that's published. And as I mentioned before, the spreadsheet template, the Excel template for the cash flow forecast, and also that calculator for figuring out the net present value of your current business will also be coming to everyone who's participated today. So, Laura, as I mentioned, that's pretty much everything I had. Was there any questions from that you can think of, or from anyone on the phone?
Yeah, Rachel, I have a question. What other tips would you have to increase your cash flow during this period?
Yeah, I think those things are very much related to you making sure you really know your business and know your customers. And that also applies equally to people who are in finance, who work within inside an organisation. Obviously, there's the business owner focuses on that very heavily. But it's those things where understanding in whatever service you offer to people, it could be that 12 months up front is of significant value to them, where they get a good discount, a month free, 2 months free for a 12-month upfront subscription. Those things can help you enormously and deal with some issues now. If you're actually the other way around, where you do have a fairly decent cash reserve, if we go back to here, and you're actually doing that now, but you do have good cash reserves, potentially going the other way, where you offer people a monthly subscription because it's actually more predictable for them, may actually help you grow that revenue number over time, which can potentially actually have an impact here. You may also be able to grow your profit number, and this number, which will then offset the differences down here. So this calculator is a good tool to figure out what's the right sort of mix for your business. There's 3 or 4 levers, and that's about it, just getting the hang of what they are. But in terms of which levers to press and what will be effective is making sure you really understand the cash flow dynamics from your customer's viewpoint and what's going to resonate with them, and then pressing those levers to get the best result up here.
Fantastic. Okay, so there doesn't seem to be any other questions. I'd like to thank you, Rachel. It was a very inspiring session with plenty of tips to take on board. On behalf of Azure Group and Redback Conferencing, I would like to thank you all for joining and encourage you to complete the feedback form that you will shortly be redirected to. If you would like any further information on today's topic or how to host your own interactive webinars, please let us also know via this feedback form. We look forward to seeing you at future webinars. Enjoy the rest of your day.